Sunday, May 30th, 2021, Monaco 64, home of alternative economics and contrarian views. So yes, we're getting a Sunday video. Aside from the live stream that we're going to do tonight at 9 p.m. London, today we're going to look at the dollar index and how it's pointing to a major move up in gold and of course silver, but I'm just going to focus on gold in this video and the general commodities. I've made many videos about the dollar index. I even have a dollar index file if you want to look through it. There's a couple of videos I've made in the past. They have a part 1 and 2, and they're entitled A Look at the Dollar Index and Its Long-Term Cycles. The first one was on May 7th, 2019. Second one was last year on June 10th. And I've been calling a top in the dollar index for even before 2019. I said it was in January of 2017, and it has been so because we haven't seen the dollar index go back above the high that we saw on January 2017. I'm going to talk as well about something that I've spoken before in technical analysis called a running flat correction. And I have to thank Ron Rosen of the Rosen Market Timing Letter for that. I think Mr. Rosen is in his 90s. He's a real veteran, and he talks about this running flat correction, which is really rare and very powerful, and we'll look into that. Before we start, we're gonna look at what the dollar index really is, because a lot of people talk about the dollar index, but they don't know exactly what it is. The dollar index is basically a replacement for Bretton Woods. And what do I mean by that? Well, it's a replacement for the fixed exchange rates that were abandoned in 1973. So the dollar index was developed on March of 1973 at 100 to try to see how strong or weak the dollar was against the major currencies. So, but you can measure it. You can extrapolate backwards the dollar index before 1973. So that's what I'm going to look at today, the cycles. And then we're going to look at how the Goldman Sachs commodity index performed in the last bull market in gold that lasted from 2001 to 2008. Because according to Ron Rosen, since 2008, we've had a running flat correction, which means even though the dollar index has risen from a low of 70.69 in 2008 to around 90 right now and even higher in January of 2017, we've seen gold also go up. So gold is corrected by going up, which is very powerful and tells us that this is not just a dollar thing. This is a fiat currency thing, that gold is going to accelerate even more when the dollar falls as well. So through some key levels that we're going to look at today, we're going to see gold and commodities accelerate, and they're going to outperform everything really. And it's going to be, I don't know what level it's going to be, but I can give you an idea of when the dollar index might bottom in the future and when gold and commodities might top. So that's what we're going to look at. So as you can see, the dollar index is basically a weighting, an index made up of 57.6% of euro, Japanese yen 13.6%, pound sterling 11.9%, Canadian dollar 9.1%, Swedish krona 4.2%, and Swiss franc 3.6%. And seeing that the Chinese yuan is very important these days, we're going to look at a chart of the Chinese yuan because that's pointing to also a major move lower in the dollar, the chart of the Chinese yuan. So I've done some calculations here. I've looked at the different cycles. As you can see here, we're able to bring back the dollar index to the late 60s, even though it started at 100 in 1973. So, as I've said before as well, the dollar index is kind of a distraction in that it's not a good way to hedge fiat currency debasement, because if you think about it, back in 73, it was at 100. Right now, it's at 90. And gold has gone from double digits to almost 2,000 right now. So that's the other thing you need to consider. So as you can see here, I've looked at the cycles and the legs down and legs up in the dollar index, and I've measured it. And the reason I've done that is because looking back at cycles and how long they've lasted and what they've done is a very good way of trying to figure out what's going to happen in the future. Cycles repeat themselves. So as you can see here, the top in the dollar index in the 60s was in September of 1969. Then you had a bottom in October of 78. So that's very interesting because gold only topped in 1980. So a lot of times the dollar index and gold are not perfectly synchronized, but that first leg was 109 months, or about 9 years and 1 month. And then I measured the second top there from the bottom. That was in February of 1985. And so on. The second bottom was in September of 92. The third top was in July of 2001. The third bottom was in March of 2008. And that's a really interesting date. So ever since March 2008, the dollar has been moving higher. But there was a top, of course, in January of 2017. I call that top 4. And even back in 2019, I was saying that was going to be the top. And why did I make that forecast? Well, because of the cycles. Because the cycle from the bottom 3 to top 4 in January 2017, that was 106 months, or 8 years and 11 months. So that was pretty long in the tooth compared to all the other cycles. So even though we made a top last year in the dollar index during the crisis where we had the biggest crash in the stock market, the dollar was still not able to top the January 2017 level. So I definitely think that that was the top. I guess the only way I will change my opinion is if we break back above that 103.82 or thereabouts. That was the level in January 2017. But as you can see here, we've got 3 scenarios of time of where this leg down or this bottom 4 could be. I've used the average of all the legs of these cycles, and that's 94.66 months. That would take us to around October 2024. The longest leg, of course, was 109 months. And that would take us to February 2026. And then you have the shortest leg, which was from 78 to 85. And that was 76 months. And that would take us to May 2023. So I would take 2025 maybe. And I think we'll probably see when there is a bottom in the dollar index. So I think we still have, at least, as you can see, at least 2 years to go. Where that bottom 4 will be, I think it's going to be below the bottom from March 2008, because as you can see, we've had lower bottoms and lower tops since the 70s in the dollar index. So now I wanted to look at, this is the interesting part here, comparing the dollar index with the Goldman Sachs commodity index. I could have used the CRB, but this is the chart that I got, Goldman Sachs commodity index. And just to let you know, the times here, the time frames are different for the charts, because the Goldman Sachs Commodity Index does not go far back as the late 60s. But this comparison here of when the dollar index moved and when commodities move is very interesting, because as you can see here, the dollar index started going down in 2001, 2002, as you can see. And it was accelerating lower towards 2004. But if you look at the Goldman Sachs Commodity Index, it was only towards the end of 2004, beginning of 2005, that it started really picking up steam. And so what I'm trying to say here, yes, the dollar index did top back in 2017. And it's normal. It's normal looking back that commodities haven't really accelerated yet. But as you can see here, even the Goldman Sachs Commodity Index now is breaking out from an important high back in 2018, pretty much like it was breaking out of an important high back towards the end of 2004, 2005. So after that, we had another, let's say, maybe a little longer, 3.5 years of weakness in the dollar and huge strength in commodities. And as you can see, the Goldman Sachs Commodity Index went from around 250 to 900 from around the end of 2004 to March 2008. So I think we're seeing the same kind of scenario now. So now let's look at the dollar index and compare it to gold. And we can do this on the same time frame because yeah, I can get gold back to 1992 and also the dollar index. And this is where the running flat correction comes into play. And you can see here now that the key support for the dollar index is going to be 88.25. And I don't know when we're going to break this. These are monthly charts. So don't expect these things to happen day to day. This is a very long-term picture. And that's why I keep telling people that you need to hold on and try to survive the short-term ups and downs in gold and silver, in the dollar. But as you can see here, the last bottom in the dollar index was in March 2008. That's the all-time low there at 70.69. And we topped in March of 2008 in gold at 1,032.80. And despite the dollar index being higher than it was in 2008, gold is almost double the price that it was. So that's a very interesting thing, because gold normally should trade inversely to the dollar index. What this is telling us is that all fiat currencies are sinking, because even though the dollar has gone up against them, gold has gone up even more against the other fiat currencies. The other thing as well is that this has been a correction in gold. This is what people don't understand. The last top in gold was 1,032. Yes, there was a new high in 2011. There was a new high last year. But those were corrections, according to Ron Rosen and running flat correction. And when the dollar drops through this 88.25, which I think is very imminent, seeing that commodities are starting to move and break out, we could see gold and commodities really take off. And they would take off a lot quicker than the other currencies would kind of take off against the dollar. And that's why hedging the dollar with other fiat currencies is not the best strategy, and I've said that for years. So let's quickly look at what Ron Rosen says about a running flat correction. So here it is. The Ron Rosen report first wrote about a running flat correction in the report dated January 9th, 2015. So yeah, I've been following this for over 6 years. This report can be found on the 321 Gold site under Ron Rosen Reports. If you read it, you would know that a running flat correction is much, much more significant than Reddit. I think he's talking about the Reddit movement, Wall Street Silver. Am I denigrating that? No, because I'm behind it. But here I'm just looking at the pure technical picture. Yes, all that's going on COMEX, on the LBMA, will be translated into a lot higher prices. And this is what the technicals are telling us. Technicals discount a lot of things that many people don't even think about. I think he wrote about the fact that the stock market bottomed in 1942 and it predated the Battle of Midway when the Americans defeated the Japanese. So there are those things. So this is a running flat correction. The forces in the direction of the larger trend are so powerful that the pattern becomes skewed in that direction. So what does that mean? Well, it means that the correction in gold, that the move in gold is so powerful that it corrected from the top in 2008, which was the bottom in the dollar, by actually going higher, which is something crazy. And we have a running flat correction in silver as well, because the top in 2008 came around 21. and the top in 2011 was when the dollar was correcting lower. So a huge running flat correction in silver as well, and in gold. I highly recommend you go into the Ron Rosen archive on 321.com, 321gold.com, and you understand why this is such a powerful move. And I think we're very close to moving through that key support in the dollar index, and that's already starting to put a rocket up prices of general commodities. They're starting to break out. So just before I finish, I wanted to show you a chart of the Chinese yuan, because the Chinese yuan is not in the dollar index, but it's an important currency these days. And you can see that it actually topped last year, and in 2019 we made like a double top. But I would say that the trend is a lot lower here for the dollar, and that the next level key support is around 625. And I think when we break through that level, we're going to see also the dollar index break through that 88.25. And I think this gives us confirmation that the dollar index is going to continue lower. So there you go. All we need to do really is be patient and know that these cycles take a while to evolve. There will be short-term noise, of course, daily, weekly, monthly, quarterly. But as I said, I think we still have at least 2 years to go in the down leg of the dollar index that, in my opinion, started in 2017. And we could even have 3 or 4 more years. We'll have to try to work out when we get there whether we have seen a bottom. But I expect it to be some kind of event. That's when we'll see the bottom in the dollar. I think in March 2008, that was the Bear Stearns collapse. Well, it didn't collapse, but it had to be bailed out by the New York Fed and JP Morgan. I think in 1992, for example, when the dollar index bottomed, I think it was September, we had the ERM crisis when sterling fell out of the ERM. So there might be something that could point us to that, to a bottom in the dollar index. I think it will definitely be below 70.69 as per the dollar index. So that's another indicator. So if we bottom, let's say around 80 in 2023, we could actually argue that we're going to have a year or two more of weakness because we have to break through 70.69. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great long weekend. I guess if you're in the UK and in the US, which is Memorial Day weekend, here's just a bank holiday tomorrow, whatever that might mean. So there you go.